Dr. Tyra Jones here, and I want to share with you the top 6 bank accounts that you need to have structured in your business. Now, a disclaimer about this information. Please make sure that you consult your CPA or your accountant to determine whether this is a feasible structure for you in your cash flow management. Now, with that being said, let's go ahead and get started. The first bank account that you should have open for your business is the operating expense account. Now, let's go back. Most business owners have that one bank account where your expenses as well as your income is the same account. So you have your expenses going out and you have your revenue coming in, and you just use that one bank account. And you probably pay yourself from this bank account as well. Which even in that sense, it may be, you may pay yourself this month, you may not pay yourself this month, it just kind of depends on what you see in your bank account. Because we operate as, what we see in our accounts, this is why this particular structure is recommended. It's just like the envelope technique that probably your mother or your grandmother taught you if you learned budgeting at an early age. To separate your funds depending on what your expenses are. You have the rent in this envelope. You have the utilities in this envelope. And you contribute to those envelopes over the next 30 days to make sure that you have the money to pay your bills. This is the same concept. Okay? So this is an age-old concept. This is not new. But you do see a lot of people talking about it now. It is a phenomenal concept that would definitely help you manage your cash flow. So let's go back. Operating expense account, right? That account typically is used as the account that you have right now. Because all of your expenses are already coming out of that account, why not just use that account? You don't have to change you have to call your vendors and say, hey, I have a new account or anything like that, because that's a headache. What you want to do is just use that account as your operating expense. That's where all your expenses come out. The second account is your income account. Your income account is basically where your revenue is coming in to your business. Now, from your income account, let's say all of your revenue is coming in. This is the account that you have connected to either PayPal, Stripe, or whatever your payment system software is, Square. That's the account that you have connected to those systems so that when your revenue comes in, it comes into your income account. Now, from your income account, you want to allocate certain amount of funds to your operating expense, right? So that means that you have to know what your overhead is on a monthly basis, on a weekly basis, so that you can properly manage that process, okay? The third account that I recommend is your owner's compensation account. And this account is exactly what it sounds like, owner's compensation. Most individuals, business owners, I guess you would say, really was confused about how to pay themselves and how to make sure that it was documented that they were paying themselves, especially if you're a single member LLC or a contractor or a sole proprietor. They were just really trying to figure out, well, pay myself. It's coming into an account that I control. I am paying myself, but how do I make that, visible to other people, to officials, to SBA, right? So you have your owner's compensation account, so that from your income account, where your revenue is coming in, you allocate a certain percentage to your owner's compensation account. I keep saying operating. I don't know. All right. So far we have 3. We have your operating expense account that I keep saying, I don't know why. We have your income account, right? And we have your owner's compensation account, right? Okay. Now, number 4, we have your profit account. Now, this is the main reason why these accounts are so much of a of a talk of the town type strategy these days, because this is how you see profit in your business before tax time, before your accountant, gives you your spreadsheets or your financial statements. Before all of that happen, you can actually see the cash flow profit in your business before you see it from your accountant. Now, so the fourth account is the profit account. Now, this account, you're going to allocate at least 1% of your revenue to your profit account. This is to ensure that you start seeing this accumulation of profit. Let's say that you do this every time you make a sale, every time you get paid, in what you do in your business. And then the first quarter, which is about 4 months, you look at your profit account and you say, wow, I have a significant amount of funds that I can possibly reinvest into my business, or I have a significant amount of funds that I can actually make a purchase of a building now for my business instead of renting, or I have a significant amount of money in my profit account where I can go ahead and purchase that van that I need for my business, or that truck that I need for my business, right? This is where you see the opportunity of scaling and growing in your business, okay? So the next bank account is a tax account. This particular account is put in place to make sure that you are allocating certain percentage of your revenue to this tax account. The last thing you want to do is owe the IRS and not have a plan as to how you're going to pay them, right? So your tax account is the fifth account. Your sixth account, your last account, is your payroll account. Now, the reason why I have this as the last account, because depending on your structure, and like I said, get advice from your CPA or your accountant to make sure that this is a feasible structure for you. Your payroll account may or may not make sense to you in your business, especially if you are the only employee in your company. However, if you have other employees in your business, and by employees, I mean W-2, right? I don't mean contractors. I don't mean 1099s. I mean W-2. If you have W-2 employees, you may want to go ahead and have a payroll account. That way, a certain percentage of allocations from your revenue are deposited or transferred to your payroll accounts. Now, you may say, Dr. Jones, with all of these bank accounts, how am I going to manage all of those bank accounts? And, how do I know the percentages of allocations to deposit into different accounts? Well, I'm glad you asked. Most business owners really don't set up all 6 accounts. It depends on your structure. It depends on how you are financially, right? But let's say that you're a type of business owner where your CPA or your accountant recommended that you at least set up the top 3 accounts. The top 3 accounts are your operating expense account, your income account, and your owner's compensation account. Those are the top 3. Now, your operating expense account and your, all 3 of those accounts, operating expense, income, and owner's compensation, typically is at the same bank, typically. Now, some may say, put your owner's compensation account at another bank so that you won't touch it, right? Because they say that a lot about that account and a couple other accounts that I'm going to mention later. But let's say that you just have those 3 accounts and you have those set up at your bank, okay, at one bank. Now, sometimes it's also recommended that you set up your tax account at a different bank. Sometimes it's recommended that your payroll account is set up at the same bank as your owner's compensation, your OPEX, your operating expense account, and your income account. So the way that it's structured and the way that it's set up and the reasoning for using different banks for these accounts really has a lot to do with consultation, right? So that's why I say make sure that you consult with your CPA or your accountant to make sure that you understand what's best for you. Now, let's say that you have a CPA or an accountant who knows nothing about this particular type of structure, knows nothing about how to calculate your allocations based on your business. Well, that's an opportunity that you have to make a decision as to what other resources are you going to bridge in, not let them go, but bridge in with your current professionals that you go to. So I welcome you to call our office at 318-223-3022 to ask us to have a conversation or a meeting with your CPA and or your accountant so that you can fully understand this process and the benefits of it, but most importantly, how you can financially benefit by properly managing your cash flow yourself, right? So with that being said, those are our 6 top bank accounts that we recommend, and I look forward to seeing you in our next training.